Hey guys, hope you are all having a great day today. Today we had a pretty big day as both AMC and GameStop were fighting to be above 35 and 170 respectively. However, both stocks ended the day below those prices. I personally saw this coming, and I was not surprised by it. The relentless attacks that we had Monday through Wednesday showed that hedge funds were super serious about dipping us below these targets, and no matter how much we bought, they were going to manipulate these stocks to fall below these price targets. But not all as bad as it seems, because this dip represents nothing more than another great discount to keep buying shares at. I have gone on record saying many times that price action for AMC and GME on the daily should not be seen as anything more than as an opportunity to buy cheap, and I still stand by that. We had been trading far high for too long after hedge funds made the mistake of letting AMC run, thinking people were going to start selling off. Upon realization that nobody was taking profits outside of options, hedge funds have had to devise an aggressive expansion of manipulation to have these stocks settle down at a more manageable and less risky price level. As such, I don't want anyone who owns these two stocks to start worrying about this dip, because we were always going to experience it and there was no way around it. Given that we would have won and ended above 35 and 170, they would come after us next week, so don't stress over stuff like this more than you should. It sucks, but it is not the end of the world. The squeeze is not affected, and if anything, more shares will be bought and acquired. Though we did not have a lot of news come out today regarding anything worth addressing, Wes Christian was able to attain the necessary funds through a fundraiser to start an investigation and represent shareholders of AMC and GameStop. It will be interesting to see if anything actually proceeds, and I really hope it does. Barron's was making headlines, blaming a bad price action of GameStop on the fact that Netflix is branching into gaming. It was so funny watching them trying to attribute the fall of a stock that nobody is selling, as data points, to another company joining gaming, as if it has anything to do with GameStop. Microsoft sells digital games, Sony and Nintendo do as well. I do not see why they see this as a zero-sum game when Netflix has nothing to do with GameStop. It is also funny how the fact that GameStop branching out to sell other products non-related to video game software wasn't met with an increased bump in price action, and Barron's does not talk about it. Why is it that when news of GameStop come out showing that the business is expanding and growing, the stock is met with an immediate price fall, which the media doesn't cover, but when an industry that does streaming services announces they are moving into the video game sector, any price fall on GameStop is directly attributed to that. Keeping it classy as always. The Fed reported a pretty significant increase in reverse repo operations, reaching $817 billion today alone. We have finally done it, guys. These small but persistent increases in reverse repo operations come as no surprise, but they do raise eyebrows. At this point, we should be reaching $900 billion in reverse repo operations within 2 weeks or so, and then we should hit the $1 trillion mark, given that no particular day makes this jump up and reach it before the average growth we have seen. Dark pool trades for GameStop accounted for 49% of the total volume today, while dark pool volume for AMC accounted for an astounding 67% of the total volume today. This comes as the highest number we have seen, and goes to show exactly the length that hedge funds went today to defeat the price for the stock. There was a very notable observation that I noted today for both GameStop and AMC, though it was way more prevalent on AMC. The stocks were being traded with more decimals than usual. One of the ways that hedge funds are able to defeat and counter positive pressure is by allowing more decimals to be shown in trades in order to keep a buy order from pushing the stock up, and instead keeping it neutral. You see, it is not as simple as buying the stock pushes it up. The systems look at the exact price paid for the stock, and if it meets and passes a certain threshold, the stock automatically raises the price. However, if the stock does not meet that certain threshold at a given moment, the buy order will not push up the price. By adding extra decimals to the buy orders, they are able to maintain the stock price trading more neutral rather than sending it up. Fidelity data shows that AMC had substantially more buy orders than sell orders. GameStop, even with today's drop, has been keeping it classy by having over 3 times the amount of buy orders than sell orders. With that said, let's quickly go over today's price action. However, let me put out the disclaimer out there. I am not a financial advisor, and everything discussed in this video are my own opinion. AMC was trading sideways for most of the pre-market. The stock was mostly underneath the VWAP, but it never deviated too far below it. It keeps retesting the resistance walls until it managed to break them close to market opening. Upon market opening, the stock had a pretty nasty fall, which was quickly followed by a pretty nice rebound that actually broke past the VWAP by a considerable margin. AMC kept trading and bouncing on the VWAP line until the last 2 hours of trading, where the stock had another brutal fall that left it reeling back below 34.50. This was very substantial, because the stock fell below the lower band of VWAP. The stock closed at 34.96, below the $35 target many hoped to close at. It is unfortunate, but nothing to stress about. Overall, though the stock kept falling, people were buying for the most part, and this price fall is going to be very advantageous to those willing to buy at these levels. I am going to make a more thorough video this Sunday explaining and talking about the likelihood of where we should be trading, so stay tuned for that. GameStop started trading pre-market with a slight bump up, but that did not matter much as the stock was met with a bearish wave upon market open. The stock fell down below 167 before coming back strong and surpassing the upper band of the VWAP, reaching over 178. The stock retraced and consolidated for a little while, bouncing on top of the VWAP line. Around the last 2 hours of trading, GME experienced a short ladder attack that took it down to 168 before closing at 169.04. GME traded very similar to AMC, and it also failed to close above 170. Like I said, I am going to work on a Sunday video talking in more depth about what to expect next week, but for now take this price dip as an opportunity to buy cheaper. We are at time where we are headed and finding both floors for these two stocks. Every time there is a big price surge, both stocks fall down and reach a floor higher than it was before. As such, this is all the natural course of trading GameStop and AMC. I want to take a minute to talk to you before wrapping up. I sound like an old recorder, but it is important to keep reminding you guys that the price action we see is nothing more than an illusion, psychological manipulation to get you to stress. Yes, dips are often laughed about now, but hedge funds are playing the long game. They are trying hard to maintain a downward and consistent falling action for these stocks to cause you guys to get bored. The worst enemy hedge funds have is retail motivation, and they will try their best to make these two stocks as unappealing and boring as possible. They will try to dip the prices and then cause them to have little to no volatility before the next surge. This is a very effective strategy that hedge funds employ through the guidance of psychologists with doctorate degrees. This is full-blown psychological warfare, and you guys need to be work within yourselves psychologically to adapt, evolve and overcome these attacks. Adopting the right mind frame, the right framework that disassociates dips with a sense of failure will get you through this. Stop equating price action with real stock value, because these stock prices should be much higher than they currently are. Stay strong, change the way you perceive things and buy the dip. Thank you for making it to the end of the video. Let me know if you enjoyed the video and if you have any fun plans for the weekend. Please consider dropping a like on the video if you found it helpful or insightful. A big shout out to my Patreons and one-time donators for making these videos possible. With that, I wish you all well and I will see you this Sunday.